Good afternoon. This is Tom Aspray with the Viper Report. It's Friday afternoon, coming to the end of election week, an hour and a half or so before the market close. Got a lot of comments from the article I wrote in mid-October, featured this chart that shows where the AD line stood as of the 16th of October. And the conclusion was that it was a very bullish trend. AD line has made higher highs, higher lows, and had broken out. So to me, that indicated that no matter what happened in those last 2 weeks heading into the election, that it would eventually come out to the upside. So as we get to the close, we've had a really strong week. S&P is up about 7%. And let's look back and see how we got there. I'm going to take you through a series of charts. First of all, let me explain what we're looking at here. So here's the SPY, the Spider Trust, tracks the S&P 500, and these green bands are close to my Stark bands, and a 20-period EMA. And of course, we have volume here. Below that, we have the S&P AD line. So it measures the advanced decline line based on all S&P 500 stocks. So what's the advanced decline line? It's a cumulative total. Every day you figure out whether they're more advancing or declining stocks. If they're more advancing, you add that into the line. If you're declining, you subtract it out. Now, some of you may have seen some of my longer term projections, what we were looking at in 2007, October. And at that point, the AD line had topped out in June. And as the market was making new highs, it was going the other direction. That's what you see when you're in a bear market. Below that, we have the NYSC stocks only AD line in red. That measures the advanced decline line just based on the stocks that are in the NYSC composite. So that's kind of where we stand. One basic tenet of technical analysis you should always stand is that, once you overcome a key resistance level, so this was the resistance level in June, once you move through it as we did in the middle of July, it now becomes good support. That's where the market held in September. You can see almost perfectly, got close to the lower Stark bands, and then we moved up. So this chart is as of Tuesday, October 27th. You can see up here in the top. And at that point, the AD lines had just dropped below their moving averages. That was signaling that we're going to see some sort of correction. You can see the moving average drop below it here and drop below it there. This chart is as of the close on Friday, October 30th. You can see the AD line has dropped further below its moving average, and the S&P has dropped roughly from around 338 down to 326, getting close to that September low. NYSC stocks only AD line also negative at that point. So that was heading into last week's action. So last Monday we closed higher. Tuesday, election day, we put in a pretty strong performance. You can see that the AD lines have moved back above their daily moving averages, suggesting that the correction was over. And both of them, you can see the stocks only is still weaker, because it's further below those highs, but it's positive. So that was after the final day of voting, and that's what the market was saying. Okay, the short-term trend is up. This chart is on Friday before the close. So the price action has been updated. The AD lines have not. And look at the Stark bands. This is why I like them. You can see that reversal we had at the start of September, right up near that band. High risk situation based on the Stark band analysis and other indicators I follow. You got down to the lows. It was a lower risk. We're near the lower bands. So also near the October 12th high, you can see the arrow here. We were touching the upper band. Said the market was ready for a pullback. We got that pullback. As I mentioned just the week before the election, we got back down towards those bands. So right now, we're up towards those bands. This R1 here is the monthly pivot resistance, 346. We've overcome that with the R2 at 355. The AD lines still looking strong as of Thursday's close. And, that bodes well for stock prices. However, the market does look a little extended because we're up in here. So we could use some consolidation. This is an indicator I frequently discuss. It's call it the NYSC A-D oscillator. It gives you an idea of the short-term status of the market. When it's high up here, it's overbought. It's usually not a great time to buy. You can see this peak in June. Also this peak in October. It was above into the overbought territory. Conversely, when you're down here, as was the case at the September lows, right in here, it was quite oversold. It got even more oversold the week before the election. You can see it was down here in the minus 1,300, but now it's rallied back up to plus 1,000 and turned down. This number is updated as of Friday's close, suggesting the market is ready for a pullback. Could take the oscillator back into the minus 400 to 0 level. You can see the AD numbers, are still negative. 1239 advancing, 1792 declining. We got about an hour left. You can see it's 305 here. Most of the averages are down a little bit. They're picking up some selling steam right now. When we started this recording, they were just slightly lower, and now they're down a fair amount. So some of these sector I watch, like this is the XLK technology. You can see it's made it above the R2 for the week, R2 resistance, and it's starting to move sideways and turn lower. Our back up into this resistance area. Not a place to be buying. We're in this one, but we're looking to a decent setback to add to the position. So we think there are going to be some more good opportunities to buy in the week ahead. I should point out that AD oscillator chart was posted on Twitter. If you want to see what I'm thinking about during the market day, I tweet at least once, twice a day. Tom Aspray at Twitter, and you can see the same chart I just featured here. What I was saying, at that point, there's 1202 advances and 1783 declines. That article on my election outlook is on forbes.com. No matter who wins, here's what the stocks are at. I look at the AD line analysis going back to 2004 and what the AD line was saying before the election and what happened to the market. It has a pretty good track record. Well, that's all I got for today. Hope you found it interesting. I always love to see your feedback, so you can email me at tom@viperreport what you liked or what you didn't like. I try to educate you in these videos, but also I do have services that I would like to have you subscribe to. So if you're interested, go to the Viper Report. You can see the Viper ETF report or the Viper Hot Stocks report. You pay through PayPal, $34.95 for each a month. You get at least 2 issues a week. The last 2 weeks, I think we've had about 4 issues a week because I update people when the market's action is wild, and the S&P futures had about a 100-point range overnight in reaction to the early election results, so that classifies as crazy action. Also, if you're interested in learning more about the market, you can take a look at this 90-minute one-on-one training with me. It's a pretty good deal, and I can answer most of your questions, and if you're trading already, I can kind of dissect your approach. So that's it for the plug today. Now that the pressure of the election's off, I'll try to update you more frequently. Thank you very much.